Let me start with a number that will make you furious. Your home insurance just went up 50%. Your roof didn't leak. Your pipes didn't burst. You didn't file a single claim. And the insurance company's excuse? Climate change. More storms, bigger fires, rising seas. But here is the secret they do not want you to know. According to III data, while the severity of catastrophe losses is rising, the overall volume of property claims actually fell by nearly 20% in 2025. Claim volumes dropped across most property lines. Homeowners' claims fell 19% year over year. In some markets, claim frequencies hit lows not seen in decades. So if the number of claims is actually going down, why is your bill skyrocketing? The answer isn't a force of nature. It's a force of greed, litigation, and a system that has discovered the perfect way to make you pay for their mistakes. By the end of this video, you will understand the 5 hidden drivers of your home insurance increase that have nothing to do with climate change. You will learn about the silent inflation destroying your home's replacement cost, the litigation explosion adding a hidden surcharge to every policy, the mathematical game of reinsurance, and the shocking denial rates that are boosting insurer profits. I will also show you why your agent's explanation is probably wrong and what you can actually do to fight back. Let me save you from being gaslit by an industry that is using a natural phenomenon to cover up a financial one. Let me start with the first hidden driver, the silent destruction of replacement cost inflation. When your insurance company raises your rate, they often point to rising claim costs. But here is the dirty secret. The number of homeowners' claims fell in 2025, but the cost to rebuild a home after a covered disaster has soared by 66% over the last 5 years. That is not climate change. That is lumber, labor, copper wire, and concrete. Residential building construction costs have soared by 66% since 2019, vastly outpacing the 19% general inflation rate over that same period. A shortage of skilled labor has had a negative effect on the amount of time and cost to replace or repair insured properties. Your premium went up not because more houses are burning, but because if yours does, the contractors will charge 3 times what they did 5 years ago. The insurance industry calls this social inflation, but you can call it what it is. An economy where plumbers and electricians now have the pricing power to name their price after a disaster. Now here is the pattern interrupt that most people do not know. The second hidden driver is the lawsuit lottery. This is where the truth really gets ugly. The Texas Coalition for Affordable Insurance Solutions analyzed that excessive lawsuits add over $6,600 annually to premiums for a typical family of 4. That is a hidden surcharge on household premiums, separate from weather-driven catastrophe losses and general inflation. How does this work? After a storm, roofing contractors and restoration companies swoop in and get homeowners to sign something called an assignment of benefits. That piece of paper gives the contractor the legal right to sue your insurance company on your behalf. The lawsuits exploded, forcing insurers to raise everyone's rates to cover their legal defense costs. Federal courts saw more than 3,000 such cases filed in 2024, marking the busiest year since 2010. The 2025 data continues that upward trajectory. So what is the result? The third hidden driver. Insurers are protecting their bottom line by simply paying fewer claims. According to a damning new analysis, 15 large U.S. insurers flat out denied at least 50% of homeowner and farm owner claims in 2025. That is not a typo. Half of all claims filed were paid absolutely nothing. Meanwhile, nearly all reported good profits, derived especially from investment income earned from premiums collected in advance. They take your higher premiums, invest the money, earn a return, and then tell you that your claim does not meet the policy requirements. The Oklahoma Attorney General has even filed a motion to intervene in a case against State Farm, alleging that the company is simultaneously pursuing additional rate increases while escalating its claim denial and underpayment practices. The fourth hidden driver is the mathematical game of reinsurance. Your insurance company does not actually have enough cash on hand to pay for a major hurricane, so they buy insurance for themselves from giant global reinsurers, and after years of catastrophe losses, those reinsurers jacked up their prices. AM Best reported that after several years of steep rate increases for property catastrophe coverage, moderate softening occurred in 2025. But the cumulative effect is already baked into your bill. And here is the catch. Even as reinsurance prices stabilize, state regulators are finally allowing insurers to charge rates that cover their actual risk. The North Carolina Rate Bureau initially asked for a 42% average rate hike for homeowners' policies, which was later negotiated down to 15%. In California, after years of political price controls, the insurance commissioner finally approved State Farm's request for a 17% emergency rate hike just to keep the company solvent. The fifth hidden driver is the one that should make you angriest: the paradox of falling claims. While you think the world is getting more dangerous, the data tells a different story. Overall claim volumes dropped across most major property and casualty lines in 2025, with homeowners' claims falling 19% year over year and personal auto claims continuing a 3-year slide. A 2025 issues brief cited in public reporting projected double-digit net written premium growth for the U.S. homeowners segment in 2025, with overall profitability expected to return in 2026. They are collecting record premiums while paying out fewer claims. That is not risk management. That is price gouging. Let me give you a real-world example of how this all comes together. A homeowner in Florida paid $1,800 for home insurance in 2021. By 2025, that same policy cost $3,200, an increase of nearly 80%. The homeowner filed no claims. The house had no new damage. But here is what happened behind the scenes. Construction costs in Florida had risen 50%. Roofing contractors filed thousands of AOB lawsuits against every major carrier, driving up legal costs. The state-run insurer of last resort, Citizens, won more than 90% of claim disputes, meaning they paid out almost nothing to homeowners, but still raised rates. And major national carriers like State Farm and Allstate won approval for double-digit rate hikes from a regulator desperate to keep them from leaving the state. The homeowner paid more and got less. That is not a climate story. That is a business story. So what can you do about it? Your agent is not going to tell you. So here is your action plan. Step 1. Audit your replacement costs. Inflation has made your old coverage inadequate. Use an online estimator to verify that your dwelling limit accurately reflects current building costs. Many of you are underinsured by tens of thousands of dollars without even knowing it. Step 2. Raise your deductible. If you have a $500 deductible, ask for a quote with $2,500. The premium savings are often substantial, and by self-insuring the small stuff, you avoid filing nickel and dime claims that trigger non-renewal. Step 3. Shop around. In 2025, the number of average quotes per person rose 78% from a low in 2024. That means insurers are hungry for business again. Use that competition. Get quotes from at least 3 companies every single year. Step 4. Do not sign an assignment of benefits. If a contractor asks you to sign anything after a storm, say no. Pay for small repairs out of pocket if you must. Do not hand a lawyer the keys to your insurance policy. Step 5. Ask your agent about mitigation discounts. New roofs, impact-resistant windows, and updated electrical systems can lower your premium. Some states require insurers to offer discounts for wind mitigation. Ask for them. Step 6. If you are denied a claim, fight back. The fact that large insurers are denying half of all claims is not a reflection of reality. It is a reflection of their internal policy. Demand a written explanation. Hire a public adjuster. Take them to arbitration. The system is rigged, but you do not have to accept the first no. Let me recap the key takeaways. Number 1. Claim volumes are falling, not rising. Your premium increase is not because more disasters are happening. Number 2. Construction costs have soared 66% in 5 years, driven by material and labor inflation, not climate change. Number 3. Lawsuit abuse and assignment of benefits fraud have added a massive hidden surcharge to your premium. Number 4. Reinsurance costs have baked permanent price increases into the system, even as they stabilize. Number 5. Major insurers are denying over 50% of claims while collecting record profits from investments. Number 6. Regulatory catch-up is finally allowing insurers to charge rates that cover their actual costs, but consumers are paying the price for years of political price controls. Number 7. You can fight back by auditing your coverage, raising your deductible, shopping around, and refusing to sign AOBs. Number 8. The climate change excuse is a convenient cover for an industry that is raising prices while reducing payouts. Here is what I want you to do right now. If your home insurance just went up, do not accept the renewal notice as final. Call your insurer and ask for a copy of your actual loss history. If it is clean, demand a retention discount. Then get 2 quotes from competitors. That 30-minute phone call could save you hundreds of dollars. And whatever you do, never sign an assignment of benefits after a storm. That piece of paper is the most expensive document you will ever put your name on. If this video helped you see through the climate change lie, hit the like button. It helps more homeowners stop overpaying for a problem that does not exist. Subscribe and turn on notifications so you do not miss my next video, which is called the One Roofing Contractor Scam that is raising your insurance bill by 40%. And comment below. By how much did your home insurance go up this year? What reason did your agent give? Share your story. I read every single comment. Thanks for watching. Now go fight that rate hike. See you in the next one.